The inflation part we've obviously seen, and that was predictable. Just when you print trillions and trillions and trillions of dollars, and this time, rather than just simply being monetizing of debt and mortgage-backed securities, this was actual cash.
So with that, let me introduce our special guest, Mr. Craig Hemke. Since 2010, he's been the editor and publisher of the TF Metals Report, found at tfmetalsreport.com. It's an online community for precious metals investors. And if you haven't checked out the report, we'll leave a link below. So check it out at Craig's TF Metals Report. It's tfmetalsreport.com. And I just wanted to make a special note here. You know, Craig and Kinesis collaborated on a video, and it's called The Biggest Gold and Silver Swindle of All Time. It's an amazing video, and it'll make you laugh, and it's also teaching a lot of people. It's got over 830,000 views. We want you to head over there later on and view that video if you haven't already seen it, because we want to get it up to 1 million. And so that with that, let's head over to the UK and talking gold with the one and only Andrew Maguire and one of our favorite guests, Mr. Craig Hemke.
Well, thanks, Shane, for the introduction. And guess who is with us today? Unmistakable Craig. How are you doing, my friend?
Andy, I think it's awesome. We're wearing like the team jersey today.
Hey, good taste, my friend.
That's right. Our mother always used to dress us alike back in the day. So I think that's kind of fun that we've continued this. Since we're technically brothers from another mother, I think it's fun.
That's right. And look at the grey all coming. Hey.
Hey.
We're on the ball. And
come on
hey,
now.
Before we start, because by crikey have I been looking forward to you coming on. Let's please remember that there was 830-something thousand views to your piece on, well, double ownership of Wall Street, of the corruption around Wall Street, and this wonderful little thing. I want to refresh everyone to it, and believe me, I'm going to get this out to some friends out in Hollywood. We want to get you up to 1 million views, and by crikey, that's going to really make some people that pay attention.
It says right here, I own a car. No, sorry, it also says in the fine print, we can get you a car in 60, 90 days if you ever need one. Well, then word starts to spread, right? And everybody else that thinks they own the car, they all show up at the garage wanting that car. Well, now, the only person that's getting the car is the first person that showed up and demanded it. And it ain't coming back. The other 99 people are out of luck, right? The garage operators hightail it out of town. Doors are locked. That's what an unallocated account is.
Well, folks, I mean, that was a little refresh. And really, please send that out to everyone, because it says an awful lot. In fact, hey, this is Groundhog Day. We're back to the same thing all over again. Craig, my friend, tell us what you're seeing, because I just read something, 3 days ago, where you predicted, and today is Wednesday, Thursday, GDP day. Hey, what did you say was going to happen? What did you say?
Well, back to that video real quick, Andy. Yeah, that was a year and a half ago, maybe we recorded that. I was actually sitting in my father-in-law's office when we recorded that. That it's pushing toward 1 million views, I think, is just awesome. And everybody should know. I mean, not all of that stuff that we talked about and that great production you guys put together, it's all still relevant. None of that has changed. I mean, every ounce of gold is still owned by 100 different people, or however many owners there are. And is that unwinding of that scheme that eventually will end this pricing structure, and we'll finally get to see what a true price for gold and silver really are, based off just the physical amount of metal that's out there. But anyway, I digress. I think we could actually go back, Andy, to the summer of 2020, when COVID was still raging, and there was not there weren't any vaccines yet. And everybody was trying to figure out what was going on. The Fed was just printing like crazy. And it became pretty clear back then, and I started writing on my site back then, that the ultimate outcome of all this would be stagflation. The inflation part we've obviously seen, and that was predictable. Just when you print trillions and trillions and trillions of dollars. And this time, rather than just simply being monetizing of debt and mortgage-backed securities, this was actual cash that was flooding out into the economy, in stimmy checks and other things from the government, to keep people afloat through the downturn. But then you also had the stag part, which was also as predictable, because there was no way the U.S. economy was going to go back to what it had been. Too many, just think of any one company that maybe used to have 100 employees, all of them working on site in 2019. Then in 2020, they find a whole different way of doing things. And they decide, well, maybe we don't need this much office space. We got by just fine with half of our people working from home. And we don't maybe need all these employees either. But either way, they can downsize their office space, which makes a glut of office space, which makes, that's just one little way that all this kind of trickles down and creates the stagnant part. So you have this big rush back, which, the administration in the U.S. want to take credit for. Oh, look at all the jobs we're creating. Well, yeah, from after losing 20 million or whatever it was. So you get kind of back, but now you've reached that stagnant part. And that Atlanta Fed model has been run by a guy by the name of Pat Higgins for years. And he's always done a pretty good job. And so it, was pretty predictable that second quarter GDP was going to be negative. And here we are. And now the most important thing of the week was what Powell told us Wednesday, all in about 15 seconds, Andy. He blathered on for 45 minutes. The most important part was in 15 seconds where he said, we have reached the neutral rate. We have worked hard to get to the neutral rate, which means, oh, okay, they're there at 2.25%. And then further, he said, and whether what we do from here going forward will be data dependent. It's no longer 50, 50, 50, laid all out. And he said that in 15 seconds, and that's when the dollar fell, the metal shot forward, and now maybe we finally set a spark of some short covering that can turn into an actual rally.
Well, it was interesting that you predicted that, as you say, a long time ago, but as late as this week when you did the Sprott piece and said, you watch, basically, it's going to be a miss. And what do we have today? We have this, That's the second quarter of GDP contraction. What does that tell us? That's a technical recession already, isn't it?
Right. And they can deny it. Powell doesn't want to take the blame. All the politicians don't want to take the blame. But if they deny it, they're only going to make it worse. If Powell, plants his flag in the ground and says, no, there's not a recession, and we're just going to keep on hiking, well, then we're going to tip over into a very severe recession. If mortgage rates go to 6%, 8%, something like that. Or they can accept the reality, which is what they'll do. And Powell will stop hiking. They'll never get the Fed funds rate above the rate of inflation. We'll have stagflation, but more importantly, we'll have kind of entrenched negative real interest rates with rising inflation expectations. And that's a very positive setup for gold, even in this current pricing scheme. That'll drive the algos, the hedge funds, to buy gold futures. And so we're very likely we've seen the lows. And that's kind of what we thought would happen this year. It'd come here in the summertime, it's a little later in the summer and a little deeper than I thought we'd get. But the rationale for things to recover now and move into 23 is sound, and we're certainly headed that direction.